Reduce your volume. Okay. Huh? It's coming from here. Okay, all right. So any doubt from the previous classes? Any doubt from previous class before we start today? So journal, ledger, trial balance are clear to you? Yes. Trial balance is not done? Not clear. Not
Yes,
done.
the trial balance we have not done yet.
Okay. So journal ledger is clear to you. Journal and ledgers. What is the journal entry will you pass for starting a business by cash rupees 1 lakh? Cash account debit to capital account. Okay. Okay, what is the journal entry will you pass for purchase of goods for cash?
Purchase account to cash account.
Purchase account debit to cash account.
Cash account.
Purchased goods from X Limited on credit.
Purchase account to X Limited.
Purchase account debit to X Limited.
X Limited.
Okay. Rent paid rupees 20,000.
Rent payable account to bank account or cash.
What is that?
Rent paid account to cash or bank.
Okay. Rent paid account debited to cash or bank through which you are paying. Good. So anything else like that? Any doubt in the journal? Journal or ledger? Nothing? So what is trial balance? Trial balance is nothing but a statement which is prepared before you finalize your financial statements. To check an arithmetical accuracy, we prepare this statement called trial balance. As you know, we are preparing journal throughout the year, and that is being posted to ledger, and some calculations are done, plus, minus, okay, carrying forward from one place to another place. Those days I'm talking about annual accounting period. Okay. So before you finalize your profit and loss account, or before you prepare your balance sheet, we need to confirm that the accounting entries are done correctly, either in journal or in ledger. Okay. To check the arithmetical accuracy, we are preparing this. It's a stage in which we are checking our arithmetical accuracy. All the accounts are correctly prepared or not arithmetically. Okay, so that statement is called trial balance. It has trial balance you can prepare at any point in time. It's only you can prepare at any point in time. Any point in time you can prepare, provided you have finished your ledger entry is done, ledger posting is done. Okay, it is not provisional, nothing. It's only to check the arithmetical accuracy. You are going to finalize your financial statement, right? You are going to prepare the financial statement. You are going to find out profit or loss, and also you are going to find out the assets, liabilities, and equity by way of balance sheet. Before you do this, you are confirming whatever has been done so far is okay arithmetically. Those days it was manual calculation. You have to add. Suppose rent account is there. 12 months you are paying rent. Okay. January 10,000. Every month 10,000 you are paying. 1 month you paid 1,000. So total should be 11,100. Correct? Every month 1,000 you are paying. Only 1 month you paid only 100. So 11 months 11,100. 11,100 should be there. The total is correct or not, that is to be checked. Of course, you can check individual account. Checking only and you are balancing it. Ledger account is balanced by calculating the total. But by and large, every account is correctly prepared or not? Is there any mistake? Instead of writing 11,100, you written 11,000 itself. Only 11,000. 100 is missing. So those kind of things can be revealed by a statement called trial balance. Trial balance is prepared only for the purpose of checking the arithmetical accuracy of the books of accounts. It can be prepared at any point in time, provided the ledger account is closed. The ledger account is balanced. The ledger account has found out the balances of particular ledger account. If so, we can prepare. But normally, before we go for the next stage, up to this stage, we're calling it as bookkeeping, recording, maintenance of books of accounts. After this stage, only the real objective of accounting is going to be achieved. What is the objective of accounting? To ascertain the profit or loss, to ascertain the financial position of the business. So to do that, we have checkpoint. The checkpoint is called trial balance. I'll tell you how it appears and how to prepare. Before that, Sari is asking something. Yes, sir. Yeah. 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 Arithmetic. The total is 11,100, but you wrote 11,000. Is that not an arithmetical error? Madam, 12 entries are there. 11 times thousands are there. One time 100 is there. The total should be 11,100. But you wrote the total as 11,000. It's a mistake. It's an arithmetical mistake. Totaling error. In general language, totaling error. We call it as in accounting arithmetical error. Arithmetical accuracy is being missing there. Is being missed there. Okay. So that can be identified by preparation of a statement called trial balance. All balances of the ledger account is being brought in this statement depending upon the debit credit. One ledger account either should have a debit balance or it should have a credit balance or it should be having a nil balance. Debit side of the ledger account and the credit side of the ledger account, the total is one and the same, means there is no balance at all. Suppose there is a customer called Rajesh. He bought goods from you 10,000 rupees. He paid you 2,000 rupees. And again, he is buying goods from you for 5,000 rupees. Again, he settled 13,000 rupees to you. Now, what's the balance between you and him? 0. 15 he bought from you. 15 he paid for you. He has paid for you. That's all over. So his account will not appear in the trial balance.
Trial balance.
Any ledger account which is having a balance, either debit balance or credit balance, will appear in the trial balance. The total of entries in debit side of the trial balance, debit column of the trial balance, and that of the credit column of the trial balance should be one and the same, should be matching with each other. Why it should match with each other? Double entry bookkeeping system. Just now you told cash brought into the business. What is the entry you told? Cash account debit to bank, capital account, 10,000 rupees.
Capital.
Yeah, cash to capital. Okay, when you buy, purchase to cash or purchase to vendor. When you buy an asset, asset to cash or asset to bank or asset to the vendor of the assets. Each and every entry, you are writing each and every transaction, you are writing 2 entries. 2 entries means 2 account is being affected. And the amount is written 2 times. Cash account debit 10,000 to capital account 10,000. 10,000, 10,000 is equal. So any entry for that matter, any journal entry for that matter, it is equal. The amount entered in 2 times in equal manner. Debit 10,000 means credit 10,000. Debit 2,000 means credit also 2,000. It is going in that way. So because of that double entry bookkeeping system, the ledger account balances of debit and ledger account balances of credit should be equal. That is being captured in trial balance. So name of the accounts, how many accounts you prepared, how many ledger accounts are there, or you can write name of the ledger or name of the ledger accounts. Accounts means simply ledger account only. Okay, name of the ledger accounts. Suppose in your book, there are 20 ledger accounts are there. So you write serial number 1 to 20, all the 20 accounts, name you have to write it here. Okay, then next one is ledger folio number. From where you are bringing that total? Ledger folio, page number of the ledger account. Suppose rent account you are writing, capital account you are writing. Somewhere in the ledger, it has some page number. That page number you have to write it here in practice, in real time. Now we can just leave it. Okay. Now this debit amount, and then credit amount, debit and credit. It is nothing but the balances, only balances. We need only the summary. You remember, accounting is doing recording, all those things over. But after final stage, we have only summary. How much total rent you paid in this year? How much total capital is in this company now? How much is the furniture value? How much is the land value? How much is the amount due from our creditors? Sorry, due to our creditors or due from our customers or debtors? How much bank loan is still pending to pay? How much interest is still pending to pay? All these things on a particular day. Ledger and journal talks about entire year. But trial balance talks about one particular day. As on today, what is the balance that is going to be checked in the trial balance? Okay, so we have to prepare a trial balance by collecting all the ledger account balances. Ledger account balances. I'll write it here. Trial balance. You can give a heading. Trial balance. Trial balance of so and so company. Say for example, XYZ Limited. XYZ Limited as on 31/3/2023. Like this, you have to give a heading. Okay, then what are the accounts are there in that particular company on that particular day? You have to collect from the ledger accounts. Suppose there are 20 accounts. You have to write 20 numbers here like this, and then we have to bring all those account name. Say for example, capital account, share capital account. You have to refer the journal, ledger, which side the balance is there. Okay. Say for example, share capital account will look like this. I'll prepare a small share capital account. You already know that, no? Just for reiterating, share capital. Suppose you are preparing a share capital account. Share capital account, ledger account. Date, particulars, amount, ledger account, journal folio number, then amount. Journal folio number, then amount. Similarly, same thing, another side also. Okay, this side is debit side, the other side is credit side. This is the ledger account, right? Ledger account. So here, some entries will be there depending upon the transaction that took place with regard to share capital. Okay. Say for example, you are starting a business on 1/1/2022. 1/1/2022, you started a business by introducing some cash. So what is the entry for capital? Starting a business, cash account debit to capital. So by cash account. If it is a normal business, sole trading business or a partnership business, you will write only capital account. If it's sole trader business, only capital account. If it is partnership business, you have to write the name of the partner, capital account. X capital account. Then Y's capital account separately. Z's capital account separately. 3 partners are there. But here, it's a joint stock company. It's a limited liability company. It's a company form of organization. So there is no need of writing each and every individual's name there, because today X will be a shareholder. Tomorrow X is not a shareholder of your company. He will sell his share to somebody else. If you are doing these changes here, it will be not ending. So what we are doing is separately we are keeping a record for shareholders. Name, address, PAN number, Aadhaar card number, address, separately, bank account number, separately one register is there. That's an accounting register. There is shareholders register, members register. Whenever a shareholder is quitting your company, you will delete his name, you will insert the new person's name. Okay, that is separate. That's not accounting register. That's a members register. Collectively, all the people share money. All the money collected from all the shareholder is going to be here. Okay, it is not giving you the individual's name, the person's name who has given the money. Collectively, it's called share capital. So only one account called share capital. Say, for example, 1 lakh is the amount invested. By cash account, 1 lakh. By cash account, 1 lakh. Okay. Another day, maybe 6/1/6/2022. Some other amount is invested again by cash account. By cash account. Suppose 2 lakh rupees. Okay. Like this, whenever there is a capital introduced, whenever there is a share sold freshly, between two shareholders, shares are traded, that is not bothered us. That is not the concern for us. X is selling to Y, Y is selling to Z. That is not a problem. If you sell any shares, the company sells any shares to general public newly, that time only the entry will come. Okay. Now debit side, no entries are there because nobody is taking back the money from the company in between. Now how to balance this account? It will be 3 lakhs, the total here, and here also 3 lakhs, I will write it. 3 lakhs, this is called balance, 3 lakhs. This 3 lakhs, this is nothing but the total. This is the same amount brought from here to here. Okay, this 3 lakh is just a total. The total of credit side. Okay, actually this is credit side, right? Credit side, this is debit side. Okay. Second aspect means? Yeah. Yeah, in that, yeah, two accounts affected. So in cash account, you have to write this again. Another one is cash account. In cash account, you will write the next one. The other aspect is written in cash account. Here it will be cash account 1/1/2022. 1/1/2022 to capital. To capital account. 1 lakh rupee. 1 lakh rupee. Another date 1/6/2022. Again to capital 2 lakh rupee. Okay. Now the total is 3 lakhs. The same total has been written here. Here this side, no, nothing is there. 0 is there. Suppose in this side some amounts are there, means you have to minus that amount. Then you have to write the balance. Say for example, 31st December 2022. To balance. By balance. By balance.
Carry forward.
Carry down. Same amount I'm writing, 3 lakhs. This 3 lakh is nothing but this amount. Listen. This is the two account. Now these two accounts are having balance, right? What is the balance in capital account? Capital account is having a balance of
3 lakh.
balance, debit balance or credit balance.
Credit balance.
Which side is more?
Debit balance.
Debit balance, cash account.
Both are same. Once again, I'll tell you what it is. Listen, all of you. Once again, those who are not knowing it. See, this is not there, right? Actually, only this side entries are there. Am I right? Only this side entries are there. Similarly, here also, only this side entries are there. Business started by cash on 1st January 2022. What is the entry? Cash account debit to cash account debit to share capital account. In this case, company, so share capital account. Okay. The company has given IPO for rupees 1 lakh. Public has invested in your company 1 lakh rupee. Okay. So this entry, is it fine? Cash account debit to share capital account. This is journal entry, right? Journal entry, right? You are writing a date here, 1/1/2022. Being share capital issued. Okay, being share capital issued or sold, being shares sold. Okay, this is fine. This is journal entry. These are all understanding. Like this, there are so many journal entries depending upon the transactions. Okay, now this need to be entered in the ledger. This need to be entered in the ledger. Now, how many ledgers are there? 2 ledgers are there. Cash account is one ledger and share capital is another account, another ledger. So I'm going to share capital account. Okay, share capital is in credit side. Look at this. This is having 2 sides in your journal entry. It is debit. This is credit. Right? So this is the journal entry format you already know. Right. So cash account is in debit side and capital account is in credit side. So I'm preparing capital account. I'm going to credit side because it is in credit side. I'm going to credit side. I'm going to credit side of the capital account. Look at this, the capital account. I'm going to credit side of the capital account. Credit side. This side is credit side, right? Credit side. I'm going to credit side of the capital account. And I'm writing why for it is credited. Why for it is credited? It is credited by cash account. Because of cash introduced, it is credited. So I'm writing it here by, I'm writing the date first and writing by cash account 1 lakh. Is that clear first of all? Without even preparing that journal, you can prepare this capital account. If you know the logic. Capital account is a heading. Whenever money comes in, you are writing in the credit side. You need not prepare this journal if you know the logic. Whenever money comes in the name of capital, how it is coming in? 2 ways it can come in or 3 ways it can come in. One is by kind. The owner will give you his own assets to you. So take this asset. What is the value? Take that as my capital. Okay. Or you can give hot cash, or you can give check, or you can transfer money to your account. 3 possibilities. If he is giving cash, buy cash. If he is giving some asset, by name of that asset, by land account, by stock account, by furniture account, whatever he gives to you. The owner gives to the company. Third one is if he is giving through check or account transfer, he is depositing into your bank account. Already company is having account, bank account. You are giving the account number to him. He is transferring the money to them. Okay, whatever it is, bank account is affected. So by bank account, either by stock or by property or by asset or by cash or by bank. Now I told you it is brought in the form of cash.
Sir, excuse me.
Yes, sir.
Sir, I have one doubt. So
Yeah.
when you said like cash is being introduced to business, so we took it as like cash account data to capital account, and
Yeah.
in trial balance actually in creditor side we are account. So by cash account we are writing just because we need to pay that back, right? That
Correct,
cash.
correct, yes.
So the creditors, that's why we are credited that cash
Not
account.
creditors. It's a owner,
Yeah.
but owner also have to
But-
pay back.
Yeah, but for if
The
he has,
concept, business
if he has
entity.
been-
Once again, sir,
Yeah,
hold on.
Yeah.
Business entity concept. Owner only gives money, but we're writing in credit side. Another way of understanding is we have to pay back this money later to the owner. Though he is the owner, business has to pay. Why? Business entity concept. Business is separate from owner. Yes, sir. Now go ahead. Yeah.
Yeah, if he has given furniture, as you said, so again for that in cash place we need to credit furniture account or
Yes, yes, yes.
because furniture also will be given back or what, sir? Because cash
Furniture also?
will furniture also will be given back like cash or what, sir? For creditors, I'm asking.
The value. See, you need not give the same furniture. Will you give the same note what he is giving it to you today? Not possible, right? It's a value. It's agreed. That's all. The furniture is yours. Later on, after 20 years, the company is going to be closed. You cannot call that gentleman, sir, come here. You are the owner. You furniture what you gave 20 years back, this like this, please take it back. No. It is now it's a purchase. You purchased it. You bought it. See, it's happening like this. You bought the furniture. For that, you are giving a paper. So if you're buying something, you have to give money, right? Instead of giving money, you are giving a stake in your company. You are giving some kind of ownership in the company. What is that ownership? The value that is agreed upon between you and the company, that value is credited. Buy furniture account 20,000, meaning you are giving furniture worth of 20,000 rupees to the company and getting the share document of the company worth rupees 20,000. That's the meaning. Okay. So simple understanding. Any asset account debit, cash account debit, or bank account debit to capital account. Whatever the way in which is giving, that need to be debited because it's coming in now. Debit what comes in? Cash comes in, asset comes in, or bank balance increases. Money comes into your bank. As the case may be, to be debited, only one account to be credited, that is capital account. If it is a partnership, you have to write individual names and you have to credit the amount, because who has contributed how much you should know. There is no separate account of partner's name is maintained in the books of accounts. So A's account, B's capital account, C's capital account, like that you have to write. If it is only one owner, no need. Capital refers to his own capital only. There is no confusion. Simply capital account. If it is a joint stock company, Reliance Industry Limited, Infosys Limited, any company is ending the name with limited. That's called limited liability company. Those companies will write like this: whatever comes in debit, cash account debit, bank account debit, asset account debit, to share capital account. Share capital. That's why I written here share capital. Okay. Is that clear, sir? Somebody asked about furniture.
Yes, sir.
Sir.
It's clear.
Yeah.
Thank you. Sir. Thank you.
Right. So,
Sir,
yeah.
in general entry, we debited like cash account to share capital account.
Yeah.
So in the debit side, in general we put them in debit side. Here when we are putting a ledger, we are keeping them in a credit side, right? Like
correct. Correct. Yes. Yes.
so
Yes.
whatever
But here,
comes in-
see what account you are preparing. Look at this. What account you are preparing?
So first one
You are
is
preparing share capital account. In share capital account, what is the balance here? Which balance? Which nature of account it is?
Share capital, we made it two. In the
But share
credit
capital
side,
amount is in which side?
credit side.
Credit side. That is why in share capital account, the amount is in credit side. But
Okay.
what that amount is, it's nothing but cash. We are writing the detail of that amount.
Cash.
Yeah. So if you are understanding that way, it's opposite. What is in journal, it will be there in the opposite side of the ledger. See, look at this. Cash is in debit side, but cash here it is in
Credit side.
that's blind understanding. But its real concept is we are preparing share capital account. In share capital account, what is the balance? Credit balance. That is why it is written in credits. Okay, so it is going on like this for all the entries. Now we come back to this concept of balancing and how to prepare trial balance. Now, in this case, there is no entry in the debit side. Normally, there won't be any entry debit side because of share capital. Okay, so if there is no entry in the debit side, what should you do? You have to take the total of this credit side. What's the total? The total is 3 lakhs. Okay, the total is 3 lakhs. The same total is going to be written in the debit side as well as a total. Okay, here no amount is there in the debit side, nothing, no entries are there in the debit side, no entries are there in the debit side. If there is any entry, what should I do? I have to minus those amount which is there in this debit side. Okay, now nothing is there, so I am just leaving it. I'm taking the same amount as total here, 3 lakhs. That 3 lakh is what we are writing. We are finding out the difference between the debit side total and the credit side total. But debit side, no amount is there, 0 amount is there. Credit side, 3 lakhs are there. So difference also. How much difference? 3 lakh minus 0 is equal to 3 lakhs. That amount I have written here in the name of balance. It is going to be the next year balance, opening balance, current year closing balance. Okay, so I'm writing balance CD. Now this account can be told as having a which balance? Debit balance or credit balance?
Debit balance, sir.
Hmm? Three lakhs. They have tried it here, this amount. Okay. Confusing? Okay, come here, sir. No confusion now. Another account I'll open. Say, for example, Ramesh account. Ramesh is our customer. Okay. Ramesh is our customer. You are dealing with Ramesh. Ramesh is our customer. Let us take some example 5 transactions with Ramesh. I'll explain you how this journal entry is made, how the ledger of Ramesh is made, how it goes to trial balance. Okay. 5 transactions. Now, first, we are starting a business this year only. Ramesh is our new customer. We are also new business. Okay. We are selling goods. We are selling goods for credit. Okay. What is journal entry will make? Ramesh not started a business, gentlemen. We started a business. Ramesh is our customer. Ramesh started a business on his own somewhere. If he start business, if he marries, we don't worry. We worry about only our business. What Ramesh is doing with us. Okay. Ramesh is buying goods. We are selling goods to him. What is journal entry will make? Ramesh account debit. Ramesh account debit to sales account with the amount you have tried it here. Is this clear? Suppose 1 lakh worth of goods. We invoiced 1 lakh rupees on Ramesh. Sorry. Okay, we invoiced 1 lakh rupees on Ramesh. This entry is fine. Okay. Now come to Ramesh account. Now we have to prepare 2 ledger account. One is Ramesh account, another one is sales account. I'm not telling you sales account, I'm telling you Ramesh account only. Logic is the same. Okay. Now which side Ramesh is? Debit side. Okay. So I'm going to debit side of Ramesh. I'm writing 1/4/2022. The sales date 1/4/2022. To sales. To sales. How much amount? 1 lakh. Without even doing this, you can simply have this Ramesh account as a ledger. You can write in the debit side whenever goods are sold to Ramesh, you can write it in the debit side. Only on credit basis. Suppose Ramesh bought goods from you on cash. That time, what's the entry? Cash account debit to sales account. That entry will not appear in Ramesh account. Okay. To sales. He has given the money and took the goods for rupees 10,000. This will not appear in Ramesh account, but it will appear in which account? Cash account and sales account. Where is Ramesh here? In this two, any Ramesh account is there? If there is no Ramesh account, why do you bring that into Ramesh account? He paid the money. He paid the money. Now in this company, total sales how much? Only 10,000. To know that, I will prepare sales account. In sales account, I'll collect all the sales. Wherever in journal entry there are sales. Okay. I want to know how much cash I have. For that, I will prepare cash account. That is why cash account goes there. Okay. Now Ramesh account. Next. Another day is coming to you. Listen. Another day, 3rd April is coming to you and is asking some goods you are selling on credit. So Ramesh account debit. Ramesh account debit. Listen, I am telling madam. So you are selling goods for 50,000 rupees. Ramesh account debit to sales account. $50,000. Okay. Another day, 4th is coming to you. 4/4. 10/4 is coming to you. 10/4 is coming to you and telling, sir, take my amount. Okay, he's giving you a check. Okay, he's giving a check for rupees 60,000. He's giving a check for rupees 60,000. What's the entry? Bank account debit. Bank account debit to why cash? Who is giving? Ramesh. After receiving a check from him, you have to minus the amount from him, no? How much is giving? 60,000 rupees. 60,000 is giving to you. Okay.
Sir, excuse me.
15th is again transacting with you. 15/4/2022 is transacting with you. He is returning some goods. Sir, your goods are not worth. Please take it back. 5,000 worth of goods is returning to you. He is sending a letter. Sir, this worth of goods found in this parcel is not up to the mark. Take it back. On receiving that, you have to make one entry. Okay. What's the entry will make now? Sales return account debit to Ramesh account. ₹5,000 worth of goods. You are agreeing, okay, you need not to pay 5,000 rupees. That's okay. We received goods from you. Okay, another day, 30th April, he is sending some money. 30th April. Return of goods. Huh? We are not paying, no. Where we are paying? We are not paying, no. What you have to pay? He has to pay to us, actually. Why you have to pay? I have given you 10,000 rupees. You've given me 2,000 rupees back. Should I give you any 2,000 rupees to you? Already you are indebted to me for 10,000 rupees. Totally we sold goods for 1 lakh rupee on credit. And again, we have sold goods for 60,000 rupees on credit. No. That is for cash. 10,000 cash, 50,000 for credit. So he has to pay actually 1,50,000 to us. From that, he already paid 60,000. Now he is returning back 5,000 rupees goods. He cannot demand cash from us because he only should pay to us. What he will do? If you don't accept, sir, no, once sold is sold. If you are telling, what he will do? Okay, no problem, I will give you only less amount. Because the hold is on him. The hold is with him actually. We are to receive money. So we cannot say, I cannot accept it. Okay, you are accepting. It's a business custom. Once goods are not up to the mark, we are accepting it back. But we need not give money immediately. Okay. When that situation will arise, if you sold goods on cash, you collected money from the customer and sold goods. He is coming after 2 days. Sir, this good is not up to the mark. Please take it back. That time, the situation of giving back the cash is arising. But normally, business people will not give the cash. What they will do? Okay, no problem. Give your goods back. Take another goods. All goods are yours. Go and select whichever you want and go. That's what people will do. Okay, right. So now 30th April is giving you some more amount. He is giving you 20,000 rupees. He is giving cash. So cash account debit to 20,000 rupees you are receiving from Ramesh on 30th April. So what is the entry? Ramesh account debit, sorry, cash account debit to Ramesh account how much? 20,000 rupees. Okay. Assume you are preparing a ledger account on 30th April 2022. Only Ramesh account I'll teach you now. So Ramesh account is here. Ramesh account is opened. First entry is done. Second date, you see, second date, what is this? Cash to sales. Ramesh is not affected, so I'm not bothered about it. While preparing Ramesh account. Okay. Next one. Ramesh to sales is there. So to sales, how much? 50,000 rupees. Date is 3/4. Ramesh is in debit side. I'm going to debit side. I'm writing it here. To sales account, 50,000 rupees. 50,000. Okay. Next date. What is the next one? Next date is 10/4/2022. Listen. 10/4/22. Okay, what is happening? Ramesh is in credit side. So I'm going to credit side of Ramesh account. I'm writing the date by why Ramesh? By bank account. What is there here? See, bank is there no. Ramesh account is in credit side. I'm going to credit side of Ramesh account. Okay, I'm writing what is there in the debit side of Ramesh here. Bank is there, 60,000 rupees. 60,000. What next? After 10th, 15th is there. Ramesh is there. Only Ramesh is there. I'm concerned about this. Otherwise, no, I skip it. So Ramesh is in which side? Credit side. So I'm writing this date in credit side. Go to credit side of Ramesh, write the date. Then what for Ramesh was credited? Ramesh was credited because of sales. I write it there, sales. Sorry, sir. How much it was amount? 5,000. 15th is done. Next date, what is the date? 30th is there. 30th, Ramesh is there. Yes, Ramesh is here. So I have to take this. Ramesh is in credit side. So I will write the date in the credit side first. Ramesh is in credit side. Write the date in the credit side. What for Ramesh was credited? By
Cash account.
By cash account. How much was cash? 20,000. Okay. Now, suppose you want to know how much is still due from Ramesh. For that only ledger account should be balanced. In today's environment, at any time you can balance ledger account through your ERP or through your account, packages. Okay. Now, manual balancing. What I told you, whenever you balance the ledger account, take the total of both the sides roughly. Okay. What's the total here? Normally, the total of debit side will be more in the case of customers. Okay. In the case of customers. So I'm taking this total here. 1,50,000. 1,50,000. Same amount I'm writing in the opposite side. Same amount. Okay. Now, what's the total of these three? 85,000. 85,000 is the total of these three. Now, this total minus this total. Okay. This 65 could be written in the same date of the last month. Okay. This is called by balance
That's
carried down.
Carry down.
Carried down. This is going to be the next month balance.
Brought down.
1/5/2022. Okay. 1/5. Okay. Now tell me, what is the balance of Ramesh account? 65,000 is the balance of Ramesh account. What nature of balance it is? Debit balance or credit balance? Debit balance. What we mean by balance, which side? Which side is more? That side is the balance. See, Ramesh has to give us 1,50,000. Ramesh has given 85. Still Ramesh has to give 65. Though it is written balance CD, otherwise you write like think like this. Which side is shortage? Opposite side is the balance. Which side is shortage now? Credit side is shortage. While you're going to trial balance, you have to write Ramesh account. What is trial balance? Yeah. When you go to trial balance, here you have to write debtors account. Debtors account. Ramesh is one of the debtors. Like this, there may be so many. Rajesh, Ravi, so many people will be there. Putting together, we call them as sundry debtors. Sundry, sundry debtors. Now assume there is only one person in our company, customer, Ramesh only. What's the amount? It will come here 65,000. Which side? Debit side. Where in ledger CD is there? Opposite side, you have to write it in. Other way around. Credit side is short. Credit side is short. I mean, debit side is short. Okay, credit side is more. That time we'll call it as credit balance. Look at the capital account. It is a credit balance. Look at the capital account. Share capital account. Look at this. 2 entries are there in credit side. No entries are there in the debit side. No entry. We are only making this forceful entry, closing entry, balancing entry. 3 lakh is there. The same 3 lakh I brought it here. The same 3 lakh is coming here because there is no debit entries. Nothing to minus. Only 0 to be minused. 3 lakh minus 0 is equal to 3 lakhs I written here. Now CD is in which side? In capital account. Balance CD is in debit side. So in trial balance, where I would write? Credit side, I would write. If you keep on writing like this, the total should be equal. The total of debit side and total of credit side should be equal. If it is not equal, then there is a mistake. That's why I'm telling you, arithmetic accuracy of the books of account is being checked in trial balance. This is called tallying. Trial balance tally. Tallying of trial balance will tell us there is a less chance for arithmetic mistake. There is no chance for arithmetic mistake. Still, there may be a mistake, but that cannot be arithmetical mistake. Trial balance agreement of total of trial, I mean debit side of the trial balance and that of the credit side of the trial balance is guaranteeing us that there is no arithmetic error in the books of accounts. Okay, in general. But there are some logic, even though there is an agreement between debit total of trial balance and credit total of trial balance, may be some error. That error may be called as compensating error. 40 rupees you wrongly calculated in one place in debit. Another place 40 rupees you wrongly calculated as credit. These both will compensate each other. One place short debit 40. Another place short totaling of credit 40. So both will compensate with each other. Trial balance will agree. Compensating error, trial balance will agree. Okay, but it's a checkpoint where trial balance should agree. If it is not agreed, you have to again go and check everything. Okay, we assume now it is agreed. Okay, we are making it everything clear and it is agreed. Any doubt in trial balance making? What I will do in exam is I will give you ledger account balances alone. I will tell you the list of ledger account balance. I don't give you the ledger account itself. It's a very big one, no? Ledger account. 1 second. Ledger account is so many. Suppose 20 ledger accounts are there. I will not ask you to prepare a ledger and make a journal. I mean, trial balance. What I will do is I will give you the CD. I will give you only the CD. Share capital account, 3 lakhs. I will not tell which side it is. I will tell you a list of ledger account. I will give you a list of ledger account with amount. And I will ask you to prepare a trial balance. How do you prepare? You know the trial balance format. You just make this format. You make this format. Okay. And also you write all the ledger accounts what I'm giving you in the question paper. Blindly you can write all the accounts. But only thing is what you do. You should know which side of that amount should be written. For that I'll give you some instruction now. We classify entire accounts into 5 categories. What are they? Yeah, equity, income, asset, liability, Sorry? Expenses. The result of these two, expenses and income, result of these two may be either profit or right. Only this much accounts are there, only 5. Liability will always be in which side?
Credit side.
Example for liability, bank loan. Suppose I'm giving a list, 20 items are there in the list. One among them is bank loan, 2 lakh rupees. Which side of the trial balance you will write?
Credit side.
Because it's a liability. You should know what item it is and you should categorize them into which category of these 5 it will come in. Then you have to decide which side it should go. Bank loan. Creditors. Creditors, I'm telling which side you will write it in the trial balance.
Credit.
Credit side. What is the logic? We have to pay money. Bank loan is one of the type of creditor, that's all. Trade creditors means the supplier to whom you have to pay money. Suppose I'm giving you a list of 20, one among them is bank loan, another one is sundry creditors. Which side of credit side? Why? It's a liability. Why it's a liability? They are suppliers from whom you bought goods, but we did not pay money still. Another example for liability. Rent payable. Suppose I'm having list of items. One among them is rent payable, interest payable, commission payable, bills payable. Excellent. Bills payable, accounts payable, any expense payable. All those things will come under liability side. Liability should be always in credit side. So I will have to write it in the credit side of the trial balance. Clear? Liability. Asset is just opposite. If liability is in credit, asset should be in
Debit.
side.
Debit.
Example for assets, furniture, machinery, cash in hand, cash at the bank, debtors. Now our
Sundry
Ramesh is our
debtors.
asset. Land and building, etc. Bills receivable, accounts receivable, stock, etc. Next, equity. Equity is nothing but capital or profit and loss account. Profit and loss. Normally, profit and loss means profit only. If loss is there, they will be telling you in bracket it is loss. Simply profit and loss 20,000. In the list of ledger account, you are coming across one item called profit and loss account, 20,000 rupees. Normally, it means profit. If it is other way around, if it is loss, within bracket, they will tell you it is loss. Loss means asset. Profit means liability. So profit and loss account simply given there, which side of trial balance you will write? Credit side of the trial balance. If it is given within bracket loss, which side of the trial balance you have to write? Debit side. That's it. Okay. Share capital account. Share capital account.
Credit side.
The 2 sides are there, you can say. Huh? Why no clarity is there? Share capital is a liability or it's an equity. It's an equity. Okay, share capital is equity. So it should be written in which side? Credit side. Credit side. Okay. Income. Very good.
Credit side.
Credit side, not in debit side. Income. Income. Expenditure should be
Debit.
Debit side.
yeah. You have to pay. You have to pay. Listen, class. If somebody is asking, please you have to listen. Madam. Some days back you gave. They are going to give you in future. Still not paid.
Credit balance.
Second, wait, madam. That's simple. You are telling two things. One is you have to pay to somebody. That's somebody is owing to you. Okay. Some days back, customer, their customer. Yeah. First of all, who are they? Customers in general. What customer they are? They are debtors. So they are asset to us. So they have to write it in. Just now, Ramesh, we written, no? Debit side. Any money, what you own is asset. Debit side. This is what you are owning. The customer you are owning. Still he is paying money, you are owning him. You are worried about him. Okay. Similarly, you are having furniture. You are owning it. So it is an asset. Which side of the trial balance? Debit side trial balance. We are talking about liability. Liability, we are talking, asset we are talking about. Income is asset. You should say no. Oh, yes. Income is asset or not?
No.
No. But sir is thinking income is asset.
It will
No.
not. No.
Don't confuse the income and asset. Don't confuse in accounting, both are different. Income and asset. Now you are learning accounts. Income and asset. Salary is an income for you. Cash is an asset for you. Individual. Individual I'm talking. For all of us sitting over here, salary is an income. Income from salary is one of the heads under your income tax calculation. Right? Income from salary. Salary is an income. Wait, listen. Don't do my job. Allow me to do. Salary is an income for us. Bank balance is an asset for us. Cash balance is an asset for us. Are you making sense? Still confused? Okay, I correct it myself. I thought salary means what you are receiving. Salary received is an income. Salary receivable is an asset. Salary received is an income. In what form you received is an asset. It's an asset. Salary receivable is an asset. Simply salary is an income. Salary means salary received. I mean, for a company, salary paid is expense. Salary payable is liability. Through what mode you are paying? That is asset. From bank balance, it is reduced. Your asset is reduced. Because of an expense, your asset is reduced. Because of salary paid, your bank balance came down. So don't confuse these four terms: income, expenditure, assets, liability. Till I'll give you one more example. Commission paid is an expense. Commission paid is an expense. The cash what you are paying is reduction in the asset. Cash is reduced. The cash is asset. The asset you are releasing in favor of someone else. Okay, so don't confuse these terms. Income and asset. Income is adding asset. Income is accumulating asset. Will you accept? So far, your asset is 1 crore. Current month, your salary is 20 lakhs. Your asset goes to 1 crore, 20 lakhs, provided there is no more expenditure on that particular day. So income creates assets. Income creates assets. Expenditure reduces assets. Income not received is income earned but not received is increasing asset. Income earned but not received, meaning agreement is done. You executed the contract, but till you did not get it in cash. No problem. It is not with you. Instead of being with you, it is with someone else. You are going to receive it. That's called income receivable. That's also asset. Income received is going to be in the form of either cash or in the bank balance. Income receivable either in cash or in bank balance, but it is with someone else, the customer. You are going to get it back. That time also it is asset. Clear? Simple. Salary paid expenses. In the ledger account, if I give you the list of ledger account, salary payable is liability. Salary paid is, but I don't give you salary paid. I will give you only salary. Don't confuse that time. It is not salary payable. It is only salary paid. The customer. In business, business will not get any salary from anybody. So we are writing simply salary. Yeah, because you are paying. It's called paid only. Okay. If it is not paid, they will write salary payable. That time it is liability. Clear to you? Income, liability, assets. Somebody is raising hands from here. Right? Yeah. Asset is what is a returnable amount? Which is asset? How do you know what he is referring to? Allow him to talk. Mobile is an asset. For you. Listen, he getting salary, you are not feeling happy and listening. Listen. Yeah. You also get it. Don't worry. I did not get tomorrow, maybe. Yeah. Sure. Yeah. You got salary. It's an income. Over. How do you get? Cash or bank balance? Cash. How much? 1 lakh? That 1 lakh is your asset. How you got that 1 lakh? In the name of salary. Salary is nothing. Your owner is coming and giving you, take 1 lakh. You're shocked. Sir, what is this? What is this? He is telling it is your salary. Then you are telling it is salary. If he is telling take 1 lakh, it's a gift for you. That time you are telling it is a gift. Both are income for you. Both are income. But what you got on your hand is called asset. What it is bringing to you is called salary or commission or gift, called income. In broader heading, it's called income. Income is a nominal term. Income is a nominal term. We are only naming it. Your owner should only tell what he is giving. Suppose giving 1 lakh. After you're going to home, he is calling to police and telling he has taken 1 lakh rupee. That time that 1 lakh is becoming theft. Income from stealing. Got it? Income from stealing. Profession. Income from profession. Okay. So what it is called nominal. You are only naming it. The purpose for which it is coming to you, the way in which it is coming to you, is only giving a name for that. You did 1 month job, you are getting it salary. Okay. You got 12 months job and you are getting appreciation of your job free of cost. Your owner is giving you bonus or gift. Okay. Or sponsoring a trip, something like that. Sponsoring, gift. Listen, sir. Gift. Okay. So the name is differing from purpose for which that money is received by you. The money what you are receiving is called asset. Irrespective of the way in which you are receiving, no matter. But something is there in your hand. Some value added with you. That value is called as, the value is called as asset. Okay, now come to your point. You got a salary. Then, yeah. 1 lakh was your salary. 50,000 was your mobile, you bought it. Now your total asset remains 1 lakh only. Cash in hand 50,000. Mobile in hand 50,000. Total is 1 lakh. Before you buy your mobile, your cash in hand is, yeah, go ahead. Okay. Now you are having 40,000 rupees with you. 10,000 gone for your landlord as rent. No. If your landlord is coming every day and knocking your door, you are closing your door and vanishing, that time it is liability. He is calling you, your mobile is switched off. That time it is liability for you. For him it is rent receivable asset. Rent receivable. He is coming 1st, 2nd April, Sunday, after your Dayanatha University class. Evening you are meeting him 6 o'clock and you are handing over 10,000 rupees. that 10,000 rupees for him is asset. 10,000 is asset. He is going to call it as rent received from so and so. That is called income. For the same thing, you are giving two concepts. The concept is rent. The really what he is getting is cash, asset. Income and asset. Income creates assets. Expenditure reduces assets. Then what you're doing? Sir, received, no, received. He received. Yeah, even not received also asset only. Receivable. Received is income. What he received is asset. Still receivable is asset. Yeah. Yes. I did not tell income and asset are same. I told you income creates assets. Income is credit. Wait. Income is credit for me. What base? Credit all income and gain. Based on that rule, I wrote there. Asset account rule, what it says? Debit all. Debit what comes in. Debit what comes in. Asset comes in. When asset is coming in, what I'm doing? Debiting. That is why in debit balance. Whenever I earn money, money is debited. What for I earned is credited. Sales is credited. Cash is debited. Look at the entry. Goods sold for cash. Goods sold for cash. What are the two things affected here? Your cash balance going to increase. Your goods are going to be decreased. And you are getting some profit maybe sometime if it is sold for excess money. Okay, now in this case, sales is in income. Will you accept at least that? Thank God you are accepting. Sales is income for the company. According to nominal account rule, credit all income. So we're going to credit sales. To sales credited. According to real account rule, debit what comes in. What is coming in? Cash coming in. So cash account debit to sales. In this simple entry, both are there. One is asset, another one is income. Sales is income, cash is asset. So cash was debited, so asset should be in debit side. Sales was credited, so income should be in credit. That's it. Don't confuse sales and income. I mean, sales and cash. Similarly, income and asset. Okay. So you have to follow this. Liabilities credit, asset debit, equity credit, income credit, expense debit. Loss, debit. Okay. That will go under this equity only. Loss means equity will reduce. Loss means equity will reduce. Profit means equity will increase. What is equity? Don't say that. Some more scholarly answer. What is equity? I told you so many times in the class. Book value of owner's claim in the business. If the business is closed, what is the money? According to book value, claimable to is called equity. Initial stage, you are introducing 1 lakh. Equity is 1 lakh. 1 year business is done. 20,000 rupees is the profit for the first year. So your equity becomes 1,20,000. Second year, 30,000 rupees profit you earned in the business. You did not take that profit at all. Now, how much is the equity in the business? 150. So it's going on like that. Okay. Suppose all of a sudden there is one loss, 30,000 rupees loss. So your equity comes down to 1,20,000. That equity 1,20,000 is there now. Divided by number of equity shares is equal to the book value of the one equity share. Okay, book value. If this is increasing, if the book value increasing, really in the market, stock market, the share price will also. So this is book value, that is market value. A good company's equity share demanded more so that the market value keep on increasing than that of the book value. Book value may be 20 rupees, market value may be 200 rupees. Simple example, you have a guidelines value for piece of lands, 1 acre land or 30-40 site in Bangalore. Guidelines value may be 1,000 rupees. But in the market, it may be sold for 10,000. It may be sold for 5,000 or 6,000. The difference. Demand is more. So irrespective of guidelines value, customers or people are ready to buy for more price. So that's what market value. Is it clear? Okay. So now at least can I ask one question in the exam, trial balance? Will you write this? Huh? Write down now. I'll tell one question. Write down. Prepare a trial balance of. Prepare the trial balance of. Prepare the trial balance of Rajesh Enterprises Limited. Prepare trial balance of Rajesh Enterprise Limited as on 31/3/2023. As on 31/3/2023. 2023 from the following ledger balances. From the following ledger balances. From the following ledger balances. Ledger balances. Okay. One by one, you write it. From the following ledger balances. One by one, you write it. Share capital. Share capital 10 lakh rupees. 10 lakhs. Share capital 10 lakhs. Debentures. Debentures 5 lakh rupees. Debentures 5 lakh rupees. Bank loan. Bank loan 3 lakh. Sundry creditors 2 lakhs. Rent outstanding. Rent outstanding means what? Rent payable 1 lakh. One lakh. Next one. Bank account. Bank account or bank balance. Okay. Bank balance 20,000. Land and building. $12 lakhs. Furniture. Furnitures 1,20,000. Stock 4,60,000. Sundry debtors 2 lakhs. Profit and loss account. Profit and loss account. $1 lakh. Yeah. I'm sorry, wait. Within bracket, mention loss. Okay. Yeah. Okay. So copy this. Like this written. You should not write like this. You have to write in a statement one by one. I mean, sentence one by one. Then you have to prepare this answer. What you wrote is a question. Now answer is trial balance as on. Trial balance of Rajesh Enterprise as on 31. Yeah. The top you have to write. The trial balance of Rajesh Enterprise Limited. As on 31/3/2023. First item given in the question is share capital. Share capital is equity. So equity is credit side. So I wrote it in credit side. Then debentures. Debentures are nothing but the loan what you are taking from general public. Debentures are nothing but a document that you are giving to the general public from whom you take loan for some number of years for some fixed rate of interest. Clear? So that's called debenture. Debenture is liability. So it's a credit side. So I wrote in credit side. Then bank loan. Obviously, you know it's a credit side. It's a loan actually, liability. Then sundry creditors are nothing but those customers from whom you have to still receive the money. Sorry, to the vendor, we have to pay the money. It's liability. Yeah. Rent payable, liability. Bank balance also, simply if it is given bank, it is called asset. There are two choices, two options available. Bank balance may be minus also. Bank balance may be plus also for a business people. Current account. In current account, you may have minus balance. If it is minus balance, they will be giving you in bracket credit. Or they will give you a word called bank overdraft. Bank OD, overdraft. Or credit. Bank within bracket they will write CR, meaning minus balance. It will go to liability side, credit side. Simply bank means debit side, bank balance, positive. We have money in bank. Here, so bank balance. Land and building asset, debit side. Furniture asset, debit side. Stock asset, debit side. Sundry debtors asset, debit side. Profit and loss account, within bracket loss is given, so it is debit side. Clear? So the total is, you have taken the total is 21 lakhs. Then what? Suppose both are not equal, your problem is, your answer is wrong. Okay, suppose as I told beginning, I was not mentioning this loss. So you'll be originally mentioning it in the credit side. Listen, sir. Originally, if I don't mention this, you will be writing this 1 lakh this side, credit side. So credit side total will be 22 lakhs. Debit side total will be 20 lakhs. The difference of 2 lakhs are there. Trial balance is not tallying. That time what to do? Once again check it. Again it is coming like that. Once again check it. You are confirming, yes sir. One side is 20, another side is 22. There is no more mistake in my side of totaling. That time, write the short in the shortage side as suspense account. Suspense account. Suspense account is nothing but an artificial nominal account opened for time being just to close the trial balance. Later on, we have to go and check all the ledger balances. Is there any mistake? Definitely there is a mistake. That's why it's not tallying. Okay, so please understand, if trial balance does not tally, does not match, that time once again check. After that also it is not matching. Definitely it is a problem of previous numbers given to you, means write the differences between debit and credit total as suspense account. Write that amount in the shortage side. Suppose credit side is 22 lakhs, debit side is only 20 lakhs. Write suspense account, newly one account you are writing it in the debit side, 2 lakh rupees, so that the total is going to be 22 lakhs. You are closing the trial balance. Then you are going and checking the errors, ledgers, journals, etc. That is not our subject matter here for MBA. Okay, just you know, that's called rectification of error. Error is there. We located the error. I mean, we found out there is an error. What error is there? Next stage. We are not going to do that. Accountant will do. Okay. Right. Any doubt in this trial balance? Trial balance is a statement which depicts or which displays, which shows the balances of all ledger accounts, either debit balance or credit balance, along with the total. Okay, it is prepared only for the purpose of checking the arithmetical accuracy of the books of accounts. Okay, it is prepared just before we prepare the financial statements. If it is agreeing only, we are going to the next step. If it is not agreeing, we stop there, we rectify the error, we prepare one more corrected trial balance, then we will go for financial statement preparation. Okay, so to prepare the financial statement, what I need trial balance. Trial balance will tell me what is the total rent I have to pay or I paid, total amount of capital available in the company, how much I have to pay to outsider in the name of liability or loan, how much stock is available, how much sales I made, how much purchase I made. It's a very hypothetical trial balance, so I don't give any all the items. Just for making you to understand the trial balance, I told you this. Okay, otherwise it's a detailed list. Maybe 100, 200 accounts will be there in the trial balance under the name of 5: equity, income, expenditure, asset, liability. Liability itself will be there, 20 liabilities. Okay, asset maybe another 50, like that. Clear to you? Okay. Now, next one is financial statement preparation. We have to take break now. Okay, we'll take break for 10 minutes, then we can assemble back. We'll prepare the financial statements. Something you are asking before we, just one more minute. You are asking something? Listen, class. Madam. Not purchased. Is not purchased. We received from our customer 5,000 rupees. Ramesh was our customer at that time. We sold to Ramesh 1 lakh rupee and then 50,000 and then 60,000, something like that. Okay. From him, we received back some goods stating that it is not up to the mark. He returned back to us. We received it. Yeah. Sorry. Why? Why it is a loss? I sold to you this water bottle. You are telling, sir, this bottle is not good, take it back. You bought from me 5 bottles. Out of 5, you are coming and giving me 1 bottle. Sir, take it back. I taken it back. How it is loss for me? Another customer will come. I will tell him it's a good bottle. Please take it. He will take and go. I examine. I will give to the person from whom I bought it. I'm not making it no. That is hypothetical you are talking about. As of now, it is come back to me. What I am going to do? That's left. Accountant does not worry about all those things. It's going to be added in the stock. No, it is goods return. That's all. It's goods return. It will add in the goods. It will reduce the amount receivable from customer. So far, Ramesh has to give me 1 lakh. Now we will give me only 95,000. So far, my stock was 25,000. Now my stock is 30,000. Whether really that 5,000 worth of goods are not able to be sold, that time I will make some decision. That will come to accounts. What I will do, I just scrap it out. That time it's a loss. Yeah. Yes. Hello, gentlemen and ladies, please listen. Everything what you are doing here is we are following only. We are not talking about something in Stone Age. But thing is, nobody is writing like this. Nobody is typing like this. F1 means purchase. F2 means sales. F3 means purchase return. All those things you are doing only backend. Some software is working for you. Okay, somebody has created or somebody is making it. Everything what you are having. If anybody is working in accounts department, yeah, trial balance is still there. It's there. Stock account is there. Capital account is there. Everything is there. But only thing is pen and paper is not there. Printer and softwares are there. Okay. See you then after the class, after the break. People, those are online, 5 minutes break. Let us assemble back after 5-10 minutes.
Sir, you said 10 minutes break.
10 minutes, sir.
5 minutes already over.
Sir,
10 minutes, sir.
sir, can you please share this Excel sheet on group?
Whoever is, I have taken a picture. If you want, I can share, forward it to you guys. It's being me, Venkatesh here.
Okay, thank you. Your name, please.
Venkatesh.
Okay.
Instead of picture, if someone share the Excel, that is clearly readable.
So easily we can edit and we can continue it. That will
Maybe it would be in the PPT that Tar is going to upload.
right? Fozia, right? This is, I think he's just.
Yeah.
Yeah,
I
Venkatesh,
think-
We can ask. We can
What's
ask
your
once the class starts.
what's your
Hmm.
contact number? Venkatesh, right? The
Ah,
side
Venkatesh.
kindly tell me your number here. You can just
Triple
send
eight
it.
409
Come again.
I just put that in chat. 888
Sure. Hey, thank you anyway.
You're welcome.
Yeah, you people have done with the OB assignment.
Yeah, we have in progress.
Okay. Because before Wednesday we are supposed to upload it, right, for the portal.
You are in which group?
I'm in 12th year. Nobody are active.
Our team members are already doing it up. We are halfway through. We are almost done.
No, that is individual.
Which assignment are you talking about?
OB, organization behavior.
OB. Okay.
Those who are online, can you hear me right?
Yes, sir.
Yes, sir.
Yes, sir.
So after preparing trial balance, we have to prepare the financial statements. Is it no? All other work you can do later. So busy. It's becoming a regular class. In my regular class only, I'll say, listen to me, stop talking, class, like that. It's becoming regular class. All right. So after preparing trial balance, we have to prepare financial statements. So we are going to start now financial statements. Before that, any doubt? Assignment is going on well?
Yes. Sir, only thing.
No. We are supposed to submit on the same date. Already it was extended. When was the last date? Originally 10th. What is the date today? They're all concepts over now. By this time, you should be keeping all the journal ledger ready. Trial balance you have to make today. You can prepare a polished one. I mean, you can put some kind of attraction, something. Then you can submit 10th. That's all.
For next class, we'll do it, sir.
You do whenever you want, no problem. Those who are going to submit by 10th. Doing for yourself, you can do it anytime. Learning is not time bound. But degree or program is time bound. So please submit it. Okay. All right. Any trouble or any confusion or anything you want in assignment? Anything to be clarified? You are starting a business by investing some money. For that, what is entry? Cash account debit to share capital. Share capital. It's a company, right? It's a company. Then you are inviting your friends also to invest in your company. They are also investing. Same entry again. By the time if you open the bank account, you can write bank account debit to share capital account. Because too much money coming in without bank, it's not good. So you can open bank account and you can bring the money. So bank to capital, share capital. Then you are going for public. Going to public and asking money. Again, same entry. But amount is changing and number of shares issued is changing from one stage to another stage. Then you are borrowing money by issuing debenture also. What's the entry? Bank account debit to debenture account. How much interest you are paying, that much it is prefixed. 9% debenture, 10% debenture, 20% debenture. The 20% is nothing but rate of interest, what you are agreeing to pay. That's called name of the debenture. Name of the debenture, 10% debenture. So bank account debit to so and so rate of debentures. How much amount? Then what are you doing? You're doing your business. Now capital is arranged. Capital is ready. You have to spend that money. Okay. How are you spending? Depending upon your business model. buying raw material or buying goods, you should keep some 3-4 supplier. You have to keep some 4-5 customers. You have to deal with only them. Again, you have to buy. Then only that ledger account will be having some kind of entries, transactions. Okay. Minimum 2 supplier if you're having, that's okay. Or 3. Repeated purchase from the same people. And then payment. Don't keep on buying on credit. You have so much of money in this company. So much. 100 crores, I think. Or 1 crore something is there. So you have to utilize that money by buying goods, establish some land and building, equipments. Don't blindly write some transactions. Write something logic for your business. Okay. If you're a manufacturing business, you have to buy raw material, machine should be there. If you're a trading company, machine is not required. Or you are a trader of machine, that machine becomes your, goods. First, goods. Yeah, provisions will be your raw material. No, provisions you have to buy. Yeah, provisions. Yeah. Yeah, depreciation. After 1 year, you can make depreciation. Yeah. Yeah, you can do that. At end of the year, you can do it. Suppose you are having a machine, depreciation you can do at the end of the year, 1 entry. Yeah. Yes. By this time, you would have searched, no? No doubt, no specific doubt. Yes. Fruits buying and selling. That I'm not understanding. Some you are telling, no, I'm not getting that. You are buying for 1 lakh, 20,000 worth of goods last. How much is sold? That will automatically take care, no? That automatically taken care. Purchase was for 1 lakh. Sales is for only 80,000. Already 20,000 is lost. It's already taken care. You need not write anything specifically. If you are selling that for some reduced goods, you are again showing it as a sales only. No need of writing it separately. You bought it for 1 lakh. Something is lost in the process. Delayed, perishable nature, perished. Remaining goods, you sold it for 80,000. Automatically, your loss is going to be 20,000. When you are preparing a balance sheet, now in trial balance, it won't be shown. You are asked to prepare only up to trial balance only, no. So it's not to be recognized. When you are preparing a P&L account, profit and loss account, there your income is 1 lakh. Sorry, your income is 80,000. Your expenditure is 1 lakh. Sales is 80. Purchase is 1 lakh. Profit is equal to minus 20,000. Automatically, you came to know your loss is 20,000. Of course, you might have spent some more amount also. Showroom rent, store rent, wage for your employees, all those things are added in the expenditure. So your loss will be a little more higher. Okay. And again, this is not a accounting. This is a business strategy or business tricks. What normally vegetable vendor? Anybody is here? Vegetable companies? Anybody is working? Companies, maybe. Companies are there, no? Yeah. Big Basket is a vegetable vending company. Don't confuse the business model. Suppose DMart is there. DMart is having vegetables? No? Perishable things are there. Okay, take any example. Some companies there, perishable goods are there. What they will do? See, simple logic. Don't even go to DMart and other thing, Big Basket. Go to some street vendor. The old lady will be sitting there with one bunch of bananas. Okay, what she will do? She might have purchased for 100 rupees. She will count how many bananas are there, 50 are there. What you will do, just like you told, you will be taking the cost is 2 rupees per banana. But what she will do is she will take cost minusing how much is going to be perish. She knows over a practice, she knows 20 bananas cannot be sold out of 100. 20, I mean, out of 50, 10 cannot be sold. Some logic she will be having. So what she will do is total cost of purchase of banana divided by number of bananas can be sold is equal to cost per banana. She will receive that amount, 3 rupees. Then she will add profit to that. 1 rupee profit. I will be selling it for 4 rupees. You may think it is very illogical one. 100% true. You can go and talk to somebody, street vendor. They are the best people to decide on these perishable nature goods. Okay. Now, automatically the perished goods cost is automatically carried forward to good units. This is normal loss actually. In accounts, we'll call it as normal loss. Normal loss should be borne by good units. What I mean by normal loss to be borne by good units, you are buying 50 bananas by spending 100 rupees. Out of 50, you are able to sell only 40 because it's going to be there for 1 week. People will come and touch like this, one banana will be lost or something due to 1 week. The hot or the summer situation or whatever it is, 10 will be lost. Remaining 40 only you can sell. So 100 divided by 40, 2.5 rupees is the cost per banana she will decide. Though it was only 2 rupees he spent, the 0.5 rupee is nothing but loss normally taking place for the nature of the goods. Suppose if it is a rice bag, this is not a case. So normal loss is nothing but the loss due to the nature of the goods. Abnormal loss, suppose abnormal loss. You closed your store for 1 week. That is abnormal loss. When you come back, only that stuff will be there. Okay, no bananas will be there. Price back, it will be automatically safe. Price back. So that is called abnormal loss. Abnormal loss will be borne by you. Abnormal loss will be borne by the company. You cannot take that to the charge of the customer. But normal loss, you are passing on to whom? The customer. So that is how it is taken care. You are receiving goods, purchase is recorded 100 rupees. Sales is recorded 80 rupees. Okay. This 20 is automatically loss. That will be coming under profit and loss next year when you are preparing a profit and loss. Okay. It is lost actually. You are not selling to anybody. You are not donating to anybody. It's automatically lost. It is not a transaction at all, first of all. But the transaction only we can write it. It's not a transaction. See, you bought for 1 lakh. Purchase account debit to cash 1 lakh over. Trial balance will tell you now or not. Only 2 items are there in trial balance. One is purchase debit side 1 lakh. Sales, cash in credit side 2 lakhs. 1 lakh in this example. Or from the previous cash, it will reduce. Okay. Tallied. So already tallied balance, trial balance is there. You are disturbing that by a transaction. That transaction also has same tallied amount, 1 lakh, 1 lakh. It will be again tallied. You are selling it. You are selling it for 80,000 rupees. Cash account debit 80,000. Sales account credit 80,000. Again, it is tallied one only. You are going to add it in the existing trial balance. Sales was 1 lakh. Now sales is going to be 1 lakh 80. Similarly, cash was some 20,000. Now cash is going to be 1 lakh. 20 plus this 80, 1 lakh. Again, it is tallied trial balance. Trial balance will always tally if we make the entries correctly. It won't be worried about what is, even if you miss one entry, also trial balance will tally. If you miss one entry, suppose Ramesh was purchasing from you, you completely ignore the transaction. Trial balance will tally. Why? No side it is getting affected. Trial balance is just a statement. No, it does not have any artificial intelligence to know whether you sold it or not. Just remain there. If you write it, it will get updated. While writing, both sides need to be updated accordingly. Then it will tally. If you are writing one side only, the other side you forgot to write it. Or one side you wrote 1,100, another side you wrote 1,010. That time it won't tally. Okay. Any other thing? Okay, now all of you take your mobile. Switch on your data if it is switched off. Go to Google. Which company you like more? Manufacturing company. Anyone? Huh? Kirloskar. Apple is Indian company. Maruti Suzuki. Tata is a company. Tata is a company. Tata Motors. Okay, go to Tata Motors. Tata Motor is a company. Maruti is not listed in India. Is not it listed in India? Is it not listed in India? Okay, I'm sorry. Indian listed in India. Listed in India. We take Tata Motors. Tata Motors Limited. Go to Tata Motors Limited website. Tata Motors Limited website. Financials are there. One of the icons. One of the tab will be financials or investors. Investors. Click on investors. If you go inside, financial statements are there. Financial annual reports are there. Okay, go to latest one, 2022. 23 is just now over. Yesterday, day for yesterday is the closing date. We cannot get that data.
So
Go
where
to
we have to
2021,
go?
22.
Financial releases or?
Yeah.
Fi-
Annual report. 21, 22 annual report you open. 21, 22 annual report you open.
RL annual report.
Yeah, go to Tata Motors Limited website.
Huh.
Go to financials or investors. Under that, you can find annual report.
Yeah.
Just click on 2021-22's annual report. The latest, according to today, is 21-22 only.
So is-
23, we can get it after 1 month.
So is it 77th annual report, sir?
I'm not sure, but 77th annual report. Okay.
What
Yeah.
are the?
Go to only independent report, independent annual report, standalone annual report. Tata Motors annual report only. What is JLR?
Jaguars.
Independent financial statement. Go to annual report. Go to financial statement. Annual report may be having some 200 pages minimum. Yeah. Yeah. Go independent audited reports. Go there. Yeah. Yeah. Go there. And there is financial statement available for you. Financial statement. I'll also open here. Okay, it is. Okay. Okay. Can you see financial statements of Tata Motors 2021-22? Financial statement, income statement or P&L account, balance sheet. Anybody is found out? 386 page number. You are having annual, financial statement of Tata Motors. Yes. Notes. Go to the main balance sheet. Anybody got the profit and loss account? Not consolidated, standalone. Yeah, what is the first amount there? First item there? Okay. Okay, all of you listen here. I will open it here. Some other company. Somebody told some page number. Wait, I'll open here.
Sir, I need to share the content you're sharing.
Here there are 446 pages are there, sir. If you give the number, it will be fine.
Number is 386 here.
Thank you.
But when I Googled financial statement for Tata Motors, it's having 486 PDF.
Yeah.
486 only. In that, actually 386 is the number wherein you will find that financial statements.
Okay.
You need to drag it down. Initially, you will find that all those car pictures, right? So you need to drag it down till the end. In that 386 page number, it is shown.
So is that the 77th one?
Yeah, statement of profit and loss. Look at this. I'm not sharing with you.
Yes,
No.
sir. No.
It is in page number 193 also is there. 193.
Actually 192 is balance sheet, 193.
Yeah, 192 is a balance sheet. 193 is the
profit and loss account.
statement of profit and loss. Once again, I'll share with you. It is Tata Motors annual report 2021-22.
A balance sheet, profit and loss.
What was the page number?
193.
91, 192.
T86, somebody was saying.
No, that
Yeah,
is
they
not the
also-
right one.
That is for balance sheet. Now I think they're talking about
That's
One-
for financial statement. It's showing
Yeah.
forming part of consolidated financial statements.
Yeah, go to
Sir told us to go with
192.
192, 193.
Yeah.
192.
Yeah, or 191. You can start with balance sheet.
Yeah.
Okay.
Are you able to see that?
Yes, sir.
Yeah, what is there? Can you read it for us?
Oh, so you shifted
Annual
to
report
download.
2021 to 22 PDF.
Yeah,
Okay.
77.
Okay.
In that, please go to profit and loss statement.
So if you come back, I think everyone gets it.
So in this, go to page number 193. That's all.
Yeah.
193. Yeah.
One ninety.
193 was the right one.
I taken some other statement.
No,
Okay,
this
please
one
read it for us. No, those are having it.
So go to 193. You are in 213 or 211.
193.
Yeah.
Look at this. This one you have to prepare for the companies from the trial balance. Are you able to see this? Okay, listen here. I think you are having this page with you in your mobile. Just listen. This is the profit and loss account of a company. Okay. When you are having a trial balance with you for a business, next stage is preparation of profit and loss account and balance sheet. Actually, that is a real objective of financial accounting. Okay, this statement is the output of financial accounting. We have to prepare this statement of profit and loss, or somebody will call it as income statement, or statement of profit and loss, or simply profit and loss account. Listen here carefully. You remember in the very first class, I was talking about the different types of business ownership pattern. Sole proprietor, partnership, joint stock company, cooperative form of organization, undivided family. Now we are concerned about only joint stock company. Okay. So preparation of financial statement is common for all the business organizations, but the format in which you have to display, the way in which you have to prepare is being guided by the regulating agencies of that particular form of business organization. Now, company form of organization in India is governed by Indian Companies Act 2013. Okay. Companies Act 2013 is guiding how a company can be started, how a company can be run, how a company can be closed. So in between, administration also comes into picture. One of these is financial management. Out of financial management, we are having accounting. So accounting is having a statement. So this statement need to be prepared according to the guidelines, according to the framework, according to the rules and regulations stipulated by Companies Act 2013 in India. If it is Indian company, if it is listed in India, any other company, no matter. If it is listed in India, it should prepare only in the format given by Indian Companies Act 2013. So this is one of the example of live company, Tata Motors, their balance sheet and their profit and loss account is in front of us. So slight adjustment, slight changes we do it here because we cannot prepare as it is in a live. Some information we may not be able to provide, and it also depends upon the data what you are having for your own company. Skeleton is given by the Companies Act. Okay, what is the skeleton? Look at this. Income statement or profit and loss account. 2 years figures need to be given. 2 years figures. But in class, we prepare only for 1 year. If you know for 1 year, same thing you can do it for any number of years. Okay. The first starting point is income from operation or revenue from operation. The format for profit and loss account is serial number. All of you write down in the notebook. Statement of profit and loss of Tata Motors or any other company name for the year ended. Statement of profit and loss. Heading is financial statement. We are going to next chapter. Okay. Financial statement. Preparation of financial statement. We are studying now. Preparation of financial statement. So one of the financial statement is statement of profit and loss. On another statement is balance sheet. Now we are learning first one, profit and loss. Okay, format of profit and loss. So statement of profit and loss for ABC Limited or some company for the year ended. For the year ended 31st March, so and so year. Okay, 31st March, some years, depending upon the question. Depending upon which year data you are recording, that year you have to write it there. So every year we have to prepare this. When you have to prepare on 31st March every year, all the companies compulsorily should prepare this. After preparing, it should be given to everybody. It should be available in the public domain. Look at this. Now, somebody may be sitting here, maybe a Tata Motors shareholder, but we just downloaded it. It should be available in public domain. If not, SEBI will not allow this company to go further. They will ask why you are not publishing it. Okay, right. So that's a company law. Come back to accounting. So this company law says this is a format. Okay, format. What is the format? Serial number, particulars, previous year, current year. Previous year, current year. This is a format. Okay, to prepare this profit and loss account and balance sheet, what we need? Some data we need, right? Where from the data comes to you? Trial balance. Trial balance is the base on which or from which we are preparing statement of accounts, either profit and loss account or balance sheet, both. Okay, is only trial balance sufficient to prepare these statements? No. We need some more information from the company's accountant. Some entries have not been done in the books of accounts. Last day, you are closing the books of accounts. Okay, but some adjustments need to be done because that is not passed in the journal, that is not posted in the ledger. Say, for example, salary you paid for 11 months. It is there in the trial balance. unadjusted trial balance. But you come to know the company is having a practice of paying salary of the current month in the next month first date. January month salary will be paid in 5th of February. So 31st March, you will be having how many months salary? 11 months salary only. January, last month, April, last year, April, you might have paid salary of March month of last year. Likewise, it is going on. So this current March month also you might have paid salary, but that salary is not of March month, that's salary is of February month. So 12 months salary will be there, paid, 12 months salary will be there. But all the 12 months is not belonging to this year, present year. 1 month is belonging to last year, and 1 more month of the current year is still payable. That is not shown in the salary account. In salary account, 12 entries will be there. The first entry is not of the current year, and the 1 more entries need to be there. It is not there because it is not yet paid. So these kind of things to be calculated. This is called adjustments. But in academics, we will be given with the unadjusted trial balance, and you will be given with some of these items. Salary in the trial balance includes 1 month salary of last year, and 1 more month salary of the current year is not still paid. These kind of informations will be there after the trial balance. Point number 1, 2, 3, like that. Total closing stock available in the company is 2 lakh, like that. Will be. Purchase is there, sales is there, but you do not know how much is the closing stock. You bought 100 units for 1 lakh, but you sold for 2 lakhs. But how many units you sold is not known to you. Trial balance does not tell you how many units sold. That will be coming from the stock taking. You have to go and verify the stock. Our stock records will be there. In that you can understand. Okay, how much is the left out stock? You bought 100 units, 80 units are sold, 20 is not sold. What is the value of the 20? They'll be giving you in the serial number 1, 2, 3, like that. Depreciation. Suppose you bought a machine for 1 lakh. You have used it for 1 year. What is the value of the machine that is used for 1 year? That's called depreciation. They will be telling you as an adjustment. So all these informations are called as, in accounting, adjustments, additional information which are required to prepare financial statement is called as adjustments. Meaning some raw transaction which is not entered anywhere in the books of accounts so far. That's called adjustments. That to be recorded in the books of accounts in 2 places. Why? If you are doing a journal entry, you are writing in 2 places. Goods sold to Ramesh. Ramesh account debit to sales. You are writing in 2 places. Goods purchased. Purchase account debit to cash. 2 places. So these are raw transaction directly coming and sitting in the financial statement. Directly coming. So you have to write it in 2 places. Say for example, closing stock is one of the item you are coming across. Trial balance is given to you. Purchase is there, sales is there. Under trial balance, after trial balance, you are finding one statement. Closing stock of this company as on 31 March 2023 is valued at rupees 1 lakh. So what does it mean? Still, goods are there with you worth rupees 1 lakh, which is going to be sold in the next year. Maybe used to sell in the next year. For current year, it is asset. As of now, it is a current asset. Current asset. Okay. If we take total purchase and sales, if you compare, you are ignoring closing stock. Purchase 1 lakh, sales 1.5 lakhs. What's the profit? 50,000 simply. But still you are having a goods worth rupees, some 10,000, forget about that. 10,000 rupees you are having. If it is so, what's the profit now? 1 lakh is the purchase. Sales is 1.5 lakh. Still goods worth rupees 10 is with you. So what's the amount of profit? 60,000. Makes sense? 1 lakh is purchase amount. 1 lakh 50 is the revenue, but still you can make a revenue of 10 more thousand. Okay, that is what it's called. Profit is 60,000. So this adjustment need to be done in the preparation of financial statement. This closing stock 10,000 should be adjusted at the time of calculating the goods worth sold. What is the worth of goods sold? The worth of goods sold is only 90,000 in this example. 90,000 sold for 1.5 lakhs. So that need to be adjusted. one place. Another place is it's an asset actually for you. When you're preparing a balance sheet, you have to add this 10,000 in the asset side. Why? Still it is asset with you. You can sell it the next year. So it should be written in two places. Example, depreciation. You have to minus from the asset value and you have to show that as an expense in the expense column of the statement of profit and loss. Okay, so like that, there are so many. Let us see one by one. Now look at the format. Serial number, particulars, previous year amount, current year amount. First one, serial number 1, revenue from operation. Revenue from operation. Serial number 1, revenue from operation. Under that, point number A. Okay, sir. Whatever is here, you write it. Previous year, current year, I told you, but it is in the other way. Current year, this is current year, this is previous year. So it's not a problem. No, we are not writing anything in the second year and first year. Both are column only. We are not going to write anything. When you're originally making a statement, you can have only 1 year because you will be having a data for 1 year only in the question. Right. Revenue from operation. Under that, point number A. Revenue from sales. Point number B. Other operating revenue. See, this is point number 1. I'm talking about this is point number 1. Revenue from operation. Revenue from operation. Under that, point number A. Revenue from sales and another one, other operating revenue. Point number 1, Roman letter 1. Revenue from operation. Under that, sub point number A. Revenue from sales or operations. Another one is revenue from other operations. Okay, revenue from other operations or other operating revenue. Okay, what is the difference between these two? Car is sold. That is revenue from operation or sales. Other operating revenue means services. For this company, it could be service. Okay, right. Total put together, this A and B put together is called total revenue from operation. Next line. Total revenue from operation. Total revenue from operation. In the amount column, write some into mark, some asterisk mark. Some amount you are writing. Okay. But now it's a format. So we're not writing any amount. You write some into mark or asterisk mark, something like that. Okay. Next, point number 2. Point number 2. Other income. So that's over now. Operating in revenue, operating. That's okay. Next, third one is other income. Okay. If you're not written also, leave it. Total income. Next one. First. Yeah. Point number 1, Roman letter is revenue from operation. Now, if it is point number 2, Roman letter means should be other income. Should be other income. First one was total revenue from operations. Main operation, another one is other operations. Then point number Roman letter 2, other income. Other income. Next, if you take total of Roman letter 1 and 2, it becomes total income. Total income. I repeat again. Other income means income from bank, deposit, dividend from other companies, shares invested. Other than operations, any other thing is there? Other income. Other than your core operation. That is called total revenue. Now, Roman letter 1 and 2 put together is called total revenue. All the companies need not to have all the 3. Some company will have all the 3. Some company will have only revenue from operation. There won't be any other income from operation. There won't be any other income also. If it is there, you take it. Otherwise, no. But format says like this. Next one, total revenue or total income. Total income. Is it clear? From trial balance, you have to take this. Sales is there means you have to write it in revenue from operation or revenue from sales. Revenue from operation. Okay.
What is the third one, sir?
Third one is total. Which one? You're asking about third Roman letter?
Yes.
Total revenue. Total revenue. Right? Total revenue. Total income. Right? Okay. Next. Point number 4. Point number 4 is expenses. Yeah. No. Okay. Total income. Next one, fourth one, that is expenses. Expenses, underline expenses. Under that, all expenses should be there in category wise. Everything is expense, whatever you're spending, but that need to be in proper headings. Okay. Point number A under expense is cost of materials consumed. It will be there as an item only for those companies that are manufacturing. If your company is not a manufacturing company, this column will be 0. You are manufacturing only, no? What is meant to be processing? What you are doing? What is meant to be processing? Okay. Yeah, that's what cost of material consumed. That's manufacturing only, no? Manufacturing means not creating anything new. From something you are converting. That's also manufacturing only. Okay. Suppose you are a company of merchandising nature. You are buying rice bags you are buying. Just like that, you are selling it to somebody. That's called trading. For them, it will be 0. Cost of materials consumed will be 0. They won't have any cost of materials consumed. They are not manufacturing anything. One second. How do you calculate this? How do you calculate this cost of material consumed? Opening stock of raw material plus purchase of raw material minus purchase return of raw material minus closing stock of raw material is equal to, please write down, come out of the statement, leave some space for that to complete this statement, come out of the statement, cost of materials consumed is equal to cost of, see here it is written there 31,693 crore. Okay. How do you know that amount? It won't be there in the trial balance. In trial balance, you won't get any amount as it is. You have to calculate. You have to add, minus, something like that. Okay, so cost of material consumed is equal to opening stock of raw material. That will be there in the trial balance. Opening stock of raw material plus what we are calculating? Cost of material consumed we are calculating. Okay, cost of material consumed is equal to opening stock of raw material, where you can find that trial balance, plus purchase of raw material. Look at the word purchase of raw material only. Purchase of raw material, that's also will be there in the trial balance, minus purchase return of raw material, purchase return of raw materials, purchase return of raw material, purchase return of raw material. This also will be there in the trial balance. One more minus closing stock of raw material. Closing stock of raw material will not be there in the trial balance. It will be outside the trial balance. One statement they will give you. From there you have to recognize. Clear to you? It's mathematics. It's not accounting. It's mathematics, right? A plus B minus C minus D. Trial balance. Last year closing stock. But that you don't worry. It will be there in the trial balance. Opening, stock of raw material 1/4/2022. That means it's opening stock. Stock as on 31/3/2022 means closing. Next. Point number B. Under expense, point number B. Write like a statement, okay? Yeah. Point number B. What is that? Purchase of merchandise or purchase of goods or purchase of stock in trade. You can write like this: purchase of stock in trade. Purchase of stock in trade. That makes sense. Purchase of stock in trade. What does it mean? You are not buying this for processing. You are buying it for just selling. Just selling. Merchandising. Buying and selling. Your company may be only into buying and selling. Only into buying and selling. You buy rice bag, keep it in the showroom, and you just sell it. That kind of goods will come here. It will be only for who is doing merchandising business, buying and selling business, trading business. It won't come for those who are doing only manufacturing business. Tata Motor is doing both. That's why it is there. Okay. Buying and just selling. Okay. Purchase of stock in trade. Purchase of stock in trade. Okay. Stock in trade means goods you are buying for selling. Raw material means goods you are buying for processing. Third one, change in inventories. Change in inventories of work in progress, finished goods, and stock in trade. Change in inventories of work in progress, finished goods, and stock in trade. Listen very carefully. Except raw material opening and closing, remaining all opening and closing you take and minus, write it. I repeat again. Change in inventory means, go to the workings. Change in inventory is equal to opening stock of work in progress plus opening stock of finished goods, WIP, plus opening stock of finished goods plus opening stock of stock in trade.
Sir, can you please repeat it?
It's very simple. Opening stock of work in progress plus
Change
opening
in
stock of
inventories is
finished
equal
goods
to
plus opening stock of stock in trade minus closing stock of all the three. I repeat again. Change in inventories is equal to opening stock of work in progress, finished goods, and stock in trade minus closing stock of work in progress, finished goods, and stock in trade. All opening plus, all closing minus. What are the openings? Finished goods, work in progress, and stock in trade. Okay. This can be in minus also. Look at this. In both here it is minus only. Opening balance 5,000. Closing balance is only, closing balance is 8,000. So change in inventory means minus how much? Minus 3,000. In that way it is coming. It is adjusting for those unsold goods. And see, in purchase, you taken the cost of goods purchased. You bought it for 1,00,000 units, but you sold only 900 units. Remaining 100 units are left with you. That 100 units cost you have to minus from purchase cost. That is why it is coming here as minus. Okay. Suppose you purchased only 100 units, but you sold 110 units. Possible? Possible. Why it is possible? Last year opening stock was there 20 units. So 100 you purchased, 110 you sold, 10 is remaining still. Okay, in that way it is possible. So it can be minus or it can be plus also. It is for adjusting the closing stock worth, minusing from your total cost. If you don't minus the still remaining goods cost from the total purchase, you are not calculating the profit correctly. You bought it for 1,000, you sold it for 1,500. Simply you cannot say 500 is profit. Sir, have you completely sold all the goods? No, still there. Then it is not 500 profit. It is going to be more profit. Okay, that's the logic. Next one, point number
Sir,
D.
closing
Sorry,
stock
point
can
number
you
D.
repeat
Yes,
again?
sir.
Closing stock, can you repeat again under the change in
Closing stock.
closing stock, that formula?
Closing stock of work in progress, finished goods, and stock in trade.
Okay.
Should be minus from opening stock of work in progress, finished goods, and stock in trade. Will give you the change in inventory. It can be either minus or less. Next, point number D, under expense column, point number D, employee benefit expenses. All expenses relating to employees should be summarized and you have to bring it here. In trial balance, you may have salary, you may have wages, you may have bonus, you may have contribution to provident fund, you may have some other expenses relating to employee. All those expenses you have to add and you have to bring it here. While doing so, one thing you have to keep in mind, listen here carefully. Salary in trial balance in debit side, you are finding 10,000 rupees. No more items are there in trial balance regarding employee. So how much you'll bring here? Employee benefit expense 10,000 over. If there is so many items, you have to prepare a small note heading employee benefit expenses. One by one, you have to write salary 10,000, bonus 2,000, wage 5,000, total. Separately, working note, note number 5, serial number you written, there you write. Yeah. Here only total. Shareholder need not to be worried about all those things. If they are worried about all those things, they have to go to note and read. Okay. Second point you have to understand here is salary given the trial balance is 10,000. After trial balance, there is one sentence. I told you what is that called? Additional information or called adjustment. In that one point is saying out of the salary of 10,000 rupees, 1,000 is paid in advance. 1,000 is paid in advance or 1,000 is for next year. If that is the case, what to do? How much salary you have to bring it here? Only 9,000 you have to bring it here. Periodicity concept. Income of the current year should be compared with the expenditure of the current year to know about the surplus, to know about the profit. So out of 10,000 rupees salary, 1,000 rupees salary is for next year, but you paid now only. So that need to be minus. Salary paid in advance to be minus. Salary is still payable. One second. Salary is still payable. There is one sentence. Salary of the current year includes only 11 months salary. One more month salary is pending. That is rupees 1,000. So what to do? Existing salary of 10,000 found in the trial balance plus 1,000 rupees salary that is still payable found in the adjustment should be added together. Total salary what you have to bring it in this statement is 11,000. Is that clear? Okay. Now, two places these need to be entered. I already told you. One place we enter. Two example I told. Two case. Take the first case. Paid in advance. That 1,000 rupees, again you have to write it in balance sheet under current asset side in the name of salary paid in advance. It is your money, but it is with employees. It is still your money only. Still you get the benefit of the work. It is your money. So in balance sheet, you have to write in one more place that is called under current asset. Balance sheet is nothing but a statement which talks about equity, liability, and assets. Equity, liability is one side and assets another side. Okay. So under asset side, there are so many assets. One of such assets should be any expenditure which is prepaid. In this case, it's prepaid expense. Prepaid. Suppose if it is outstanding. What is outstanding? Still payable. Second case I told you, still payable. That time you are adding with the salary. As usual, I told you. Another thing, where should write in balance sheet? Liability side. Salary payable or salary outstanding. Clear? It is not only for salary. This logic is applicable for all income and all expenditure. This is called accrual concept. You remember we studied accrual concept. Though it is not, even though it is not received in cash, but you are eligible to receive. So you write it as income. Even though you did not pay, but you enjoyed the benefit of the workers working in your company. So you write it as an expenditure. Though it is not, even though it is not paid. Clear? So right. So this is employee benefit expenses. All the expenses of employees. Example, salary, bonus, contribution to provident fund, wages, etc. Yeah. So how many of you are understanding what he is asking? How many of you are understanding what he is asking? So very less number is able to understand. We will keep that separate. Okay, please, sir. No, only raise voice. Yeah. You'll study later. Next. Discuss with them later. Next one. Yeah. that we refers to you with another teacher next semester. Come back to this. It takes so much of time. Let us complete accounting. Okay. It does not mean that I don't want to discuss, but time already I'm delayed by 3 hours, 4.5 hours. This might have been done in the second class, part 1, the first 1.5 hours, but till we are not able to do. Please, we'll come back. Next, employee benefit. Simple logic. Any benefit that you are giving to employee, all those things should come under employee benefit expense. That's the logic. Second one, finance cost. Next one, point number E, finance cost. Any expenditure you are making on arranging loan or for getting capital, finance cost. You've taken a loan for 1 lakh. You are supposed to pay interest of 10,000 rupees. That 10,000 comes under finance cost. Interest, mainly interest. Interest, bank charges. Okay, penalty in the bank for non-payment of EMIs. These kind of things will come under finance cost. In which one, sir? Why? Logic is any interest what you are paying for loan will come under here. Renting of, you take an asset for rent. Okay, where that will come? Other expenses. Other expenses. Okay. Right. So interest, bank charges, or any penalty on finance related aspects. EMI, not payment, all those things. Okay. Yeah, it will be there in the trial balance. Okay. Similar logic, interest paid on loan, 1,000 is there in trial balance. In adjustment, they're telling you 6-month interest is still pending rupees 1,000. So how much you will take it here? 1,000 found in interest paid in trial balance, debit side 1,000. One more 1,000 is given in the adjustment stating that half year interest is still pending rupees 1,000. So how much interest you have to take it here? 2,000. 1,000 plus 1,000, 2,000. Another 1,000, that second 1,000, where you will write again? In balance sheet, which column? Payable. Payables, liabilities. Interest outstanding 1,000 rupees. Clear? So simultaneously you have to learn both. One is in one place called maybe statement of profit and loss account, another place maybe in balance sheet. Sometime maybe in both places. Okay. Again, next one, this you leave it, foreign exchange loss. Yeah, next one you take depreciation and amortization expense. Foreign exchange loss means it's due to the export and import of raw material and output. In that, if you have any net effect, that will write, but normal companies, we are assuming our company is not into import and export. Take this depreciation and amortization expense. Next expense is depreciation and amortization expense. Yeah. Skip F. Okay. So what is depreciation and amortization? Fixed asset reduction. Value of reduction in fixed asset is called depreciation. Suppose you bought one machine for 1 lakh rupee. You are planning to use it for next 5 years. The life of that asset is next 5 years. Per year cost of the asset is 20,000. 1 lakh if you bought means 20,000 rupees. That 20,000 is called as depreciation. That 20,000 only you have to take under depreciation. Now, this 20,000 you have to minus from the machine value in the balance sheet. In the balance sheet, don't write 1 lakh. Machine 1 lakh minus depreciation 20,000. So amount is 80,000. The current year, end of the current year, your machine cost, your machine worth is 80,000 only. Book value is only 80,000. Are you able to sell it for 80 or not? That no matter for accountant. So if accountant is concerned, it is 80,000 rupees book value. Adding 20,000 in depreciation, minusing 20,000 from concerned asset. Concerned asset here is machine. So if it is furniture, minus from furniture. If it is motor car, minus from motor car. Likewise, there are so many fixed assets will be there in the company. For all those assets, you have to calculate depreciation. Put together is called total depreciation. That should come under this column under depreciation. Then what is amortization? Same logic for intangible asset. reduction in the value of fixed asset, but it is intangible in nature. Say, for example, patent, you bought it for 1 lakh. You bought the patent for 1 lakh. By paying 1 lakh, you bought the patent. You are able to use only for next 10 years that patent. After that, the patent is lapsed. Now, every year, the patent amortization is 10,000 rupees. Amortization. Amortization means reduction in the value of intangible fixed assets. Okay. If anything is there, that nature in your company, calculate, it will be given in the question percentage. Depreciate machine at the rate of 5%. What does it mean? Machine value will be found in trial balance. On that 5% you have to calculate that 5% amount. Suppose it's 5,000, bring it to depreciation. You have to make one small note, depreciation and amortization heading. Under that point number 1, depreciation on machine 5,000, depreciation on motor car 20,000, depreciation on furniture 5,000. Total is 30,000. Similarly, amortization. Amortization on patent, amortization on copyright, amortization on goodwill, something like that. Total. Total will be coming under P&L account in the name of. All those amounts will be minus from respective asset, concerned asset in the balance sheet, in the asset side, while writing the asset value. Very clear? Yes. Expenditure and income will be noted in statement of profit and loss. Assets, liabilities, and equities will be recorded in balance sheet. All these 5 will be there in the trial balance. From trial balance, our duty is to segregate these 5. 2 will come under P&L account, 3 will come under balance sheet. What are the 3? Equity, liability, assets. What are the 2? Income and expenditure. That's all. Let us close it. So next one, other expenses. Something you are asking. Yeah, sorry. No need, sir. No engineer. Buying. Getting means what? Buying? Yeah, buying. Listen, sir. Help me. Yeah. Buying. What to do? Yeah. He's going to square 1. Buying. What you do with, suppose you're buying property, what to do? What will you do first? If you're buying a property, what will you do first? That and all is okay. In accounting, what you do? You make journal entries. No, that's all. Why do you worry about LKG now? Your UG admission is given based on 12th mark. We don't worry whether you studied 11th, LKG, UKG, first standard or not. This is LKG actually. What is LKG? Buying asset. As soon as you buy asset, what you do? You make an entry, asset account debit to cash account. That will come under which one? Ledger account of that asset. That will go to trial balance. In trial balance, machine account 1 lakh. It will be there. That 1 lakh is accumulated in so many period also maybe, or only one time you bought 1 lakh rupees worth of machine. That's all. Why do you worry now? You have to worry now what is available today in our trial balance. Let it be. Okay. How do you know that? That is, market means you are buying or selling now. You are neither buying nor selling. You are asking a broker, sir, how much is going in this Jairam layout, Banarkata road? He is telling 1 square feet, 4,000 rupees. He is thinking you are going to buy. Then you are selling, sir, I have 20-40 site there. Can you sell and give me for 4,000 rupees? 4,000 rupees, yes. Before Corona, it was like that. But now it is only 2,500, you will say, because you are going to sell. So what is market? It's a hypothetical value. Except stock market, remaining all values are hypothetical. In stock market, I can refer, he bought it for 200 rupees. A company stock, he bought it for 200. It is there in the record. That is the real market value. But land, other properties, how do you say market value? Suppose somebody bought, yes, market value, true. But how do you know that is the true value? If you go and ask in the register office, you might have told 500 rupees per square feet. But normally you might have given 5,000 rupees per square feet. So there is nothing. Okay, even though if it is true, first of all, it is illogical. Second one, even though I assume it is true, what does it matter for you? Okay. No, we are not considering that. Yeah. Mm. 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 Yeah, building we are considering depreciation now, but that is not based on the market value. I have a building. I'm doing my business in that building. I bought it for 10 lakhs. How many years I am going to use it effectively, that 10 lakh rupees in the building, I consider and minus it. But that is not based on the market value. Suppose tomorrow the market value, as per your guidelines, the market value is 20 lakhs. You bought it for 15. Year over. You are asking a broker, he's telling 20 lakh rupees is going. If you are selling, I will ready to buy for 20 lakhs. That is market value according to you. But that is no matter in accounting. No matter in accounting. Cost concept is the matter in accounting. We are ignoring, except for sale of goods. We are not considering any market value. Only based on cost. Suppose 10 years over. You have been doing the business for 10 years. You bought an asset long ago, before 10 years, for 15 lakh rupees. Now you decided to sell your business. As an ongoing business, you are selling. Tata company was buying Chorus. Now the L&T was buying Mindtree. Like that. Satyam was purchased by Mahindra, right? Mahindra. So like when you are going to buy something, when you are going to sell something, only this market value comes into picture. That time, I will not tell my buyer, sir, I bought it for 15 lakhs only. You take it for 15 lakhs. That is not correct. What we will do, we will revalue all the assets. We will revalue all the liabilities, and you'll find out one price for your business. Then you will tell an offer to the buyer, sir, I'm ready to give away my business to you if you give this much money. That is called purchase consideration. In the merger and acquisition deal, you might be seeing, in merger and acquisition, some company is acquiring another company. The acquired company should tell some price. The acquiring company will say some other price. They will negotiate. There are people, merchant bankers are there, investment bankers are there, or corporate counseling people are there. They will come and mediate both of you, and they will finalize a price. That time only this market price comes into picture. Till then, what you are seeing in the balance sheet is not the market value. What you are seeing in the balance sheet is just a book value, not cost, book value. It should be called as book value. Book value. Now scroll down little, you can understand this logic very easily. Go to balance sheet. Balance sheet stop, yeah. Look at this balance sheet. Go to liability side. Equity share capital is how much? 765 crore. Am I right? In crores only, yeah. 765 crore is the equity capital of Tata Motors as on this particular date. There is no change. You look at this. There is no slight changes there. Okay. This 765 is the original capital introduced. Original capital introduced by the promoters as well as by the shareholders after IPO is done. Look at the other equity. Other equity means you have earned profit so much over a period of time, which has not been given to shareholders still. They're reinvesting in the company itself. That is too much. Look at this. That is so much. Look at the, yeah, 19,178 crore is the money what the company has earned over a period of time. Now put together, look at this. Put together is 19, okay, assume 20,000 crore. 20,000 crore is the book value of equity of this company. 20,000 crore divided by number of equity shares. How many number of equity shares are there? You can go to share capital, note number 1. This is note number 1. Sorry, note number 21. If you go to 21 note number, you will be coming to know how many shares are there. So 20,000 crore divided by number of shares will be equal to book value of one equity share. Now you take the real market value of Tata Motors equity share. It will be too much. It will be too much. Why? It's an ongoing company, profit-making company. So that is the market value of the company. This is not the market value. This is only a book value. You have seen in the newspaper net worth of the company, they will write it now. This is nothing but the net worth. Tata Motors net worth is 19,944.15 crore as on this particular date. except some adjustments that is anything is there, you have to do that. Otherwise, this is the net worth. Owner's value. Book value. Again, it's a book value, not a real value. But book value is an indicator. If more book value, definitely market value also will be more. Some companies, book value is 10 rupee per share. How do you find out the book value of one share? Net worth of the company divided by number of equity shares of the company on that particular day is equal to book value of one equity share. For any company, the book value is 10, but the market value is 2. What does it mean? Nobody likes that company. Book value is 10. You are telling my company is having 10 rupee one share. But general public, the market, finally, who is the superior authority? Public. General public, buyer, market. Market is valuing your company only for 2 rupees. That means there is some problem in your company. Okay, valuation is not wrong. Valuation is so much less for your company. Okay. Valuation wrong, that is different. Adani case, that is different. How do we influence the valuation? Okay, that is for buying and selling. Okay, I think we are talking too much about the next semester. Come back now in the accounting. Let us close this. I think we are about to close the P&L account, right? Next one. We are already crossing time. 2 more minutes will take. Expense, other expense is done. Next one, total expense. Total expense. Total expense. Total expense means what? All the third point, whatever you are having, you would add and you would write total expenses. So total expenses is 4. Why 5? 4 only now. Expense is 4, then it's total expense also 4 only. 4 only. Total expense 4. Next line, profit or loss. Profit or loss. Profit or loss. Profit or loss. Next one. Profit. Fine. Yeah, point number 5. Profit or loss. Within bracket. Within bracket. No. Within bracket. Total income. What is the total number for total income? Total income number is 3. So 3 minus 4. Within bracket 3 minus 4. Serial number 3 is total income. 4 is total expenditure. So total income minus expenditure is equal to profit or loss. Okay. Next class will come in. Copy the format of balance sheet. The previous one. Okay. That you copy and come. We will do one question. How to make balance sheet and how to make profit and loss account based on the trial balance. Is it clear?
So we don't have to include this exceptional items and all in this semester, or we have to do it?
No. If the company has
Okay.
any exceptional item means what? Exceptional item. We'll discuss next class. But not in general.
So we
Thank you
have
so
to
much.
write profit and loss only. This 5th one.
Yeah. Once again, please. One student is asking something. Once again, don't make noise. Yes, madam. Go ahead.
So we have to include till 5th profit or loss before exceptional item and text till that
Yes,
only.
yes. Just you assume there is no exceptional item. Okay.
Okay.
We don't have any exceptional item. So profit or loss is just a profit or loss. That's all. Before also same thing. After all the same thing. Because we don't have exceptional item. Okay. Some loss due to one branch got into fire or some earthquake is there, one branch is destroyed. Those kind of items are called as exceptional item. So we assume that are there. Thank you. See you again in the next class.
Can you share the Excel to us, sir?
Sure. I will do that.
Thank you, sir.